Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of the reporting obligations for U.S. persons who have Australian superannuation accounts. There's lots of different international information reporting forms for U.S. persons when they have foreign accounts, assets, investments, and income. The superannuation is not entirely clear, but there are some basics that we should walk through so that you can at least get on the board. Superannuation, right? It's like a hybrid pension 401k. It has some privatized social security aspects to it. You work in Australia, you have an Australian employer, chances are, even if you're self-employed, chances are that you're contributing to the superannuation. There's pre-tax dollars that are contributed. You can make concessional, non-concessional contributions. Three main types. There's privatized superannuation. You work for an employer. Public, you work for like the government or a university. And then the self-managed superannuation fund, the SMSF. That's where it gets a little more complicated because you're basically overseeing your own fund. It can kind of really get into the grantor trust situation much quicker. Reporting a superannuation. So there's lots of different acronyms when you're dealing with international tax. The FBAR, Foreign Bank and Financial Account Reporting. If you look at the publication, I think it's 5569. They'll released in February-March 2022. Sorry, it'll identify the Mexican Afore, the RRSP in Canada. So presumably the superannuation would also be reportable as well. Form 8938 is for Foreign Account Tax Compliance Act, FATCA. That requires pension plans to be reported, and there's no exception for superannuation. So superannuation would be required for that as well. Form 8621 is passive foreign investment companies, and typically if you have a PFIC, you have to report Form 8621, but if you're in a treaty country and in a pension trust type scenario, then there are some exceptions that may apply. And the 5471 would primarily be for a self-managed super in which there's a PTY limited performing the management of which the U.S. person has some ownership in the entity. A few important facts. If you've noticed, the one form that we haven't discussed is 3520, 3520-A. These are very complicated forms, and the failure to file them can come with very high fines and penalties that the IRS likes to enforce. So in general, our thought process is when it comes to foreign trusts, which is the main purpose for 3520 and 3520-A other than gifts for 3520, they're thinking they want to cut down on people moving money offshore, your offshore asset protection trust, other foreign types of trusts. They probably were not meaning things like superannuation. How do you know that? Well, if you look at Revenue Procedure 2014-55, it's pretty clear that the RRSP, which is kind of sort of similar to the superannuation, at least in concept, is excluded from having to file the 3520s. Now, you still have to do the FBAR and you still have to do the Form 8938, but you may be able to avoid 3520s under Revenue Procedure 2020-17. So 2014-55 is specifically for RRSPs. 2020-17 is for all different types of retirement and non-retirement tax deferred plans in the foreign country. Under this particular revenue procedure, it does not specifically provide which types of foreign pension plans have to be reported, which types do not. There's a set of different factors depending on whether it's retirement or non-retirement. Whether or not the superannuation fits into that will depend on how you evaluate those factors. We have an entirely separate presentation and article on that. Treaty election. So some people, usually non-U.S. citizens, won't be able to make treaty elections so that they're not necessarily taxed on their superannuation if they're living in the foreign country. If you make a treaty election to be treated as a foreign person, that does not eliminate the requirement to have to file the FBAR 8938, things of that nature, although you may not have to do the 8938 if you're not filing the Form 1040, but are instead filing the 1040 NR. But the FBAR would still be required. That's also identified in that publication, which refers to various statutes and regulations. If you're out of compliance and you want to get into compliance before the IRS funds you, there's lots of different programs available. They're referred to as offshore voluntary disclosure, offshore amnesty. The traditional voluntary disclosure program is typically for people who are willful or can't certify under penalty of perjury that they're non-willful, especially the new version of EDP versus old OVDP, which was a specific offshoot of traditional voluntary disclosure program. That's a lot. That's a lot of words right there. Under new VDP, you generally don't apply unless you're willful. If you're non-willful, there's a lot of other options available. There are the streamlined procedures, there are the delinquency procedures, and then there's reasonable cause. We have a ton of free information available on our main websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate for your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.